In today's video, I'm going to teach you how to buy gold in Trading 212. If you're curious about gaining exposure to gold, Trading 212 makes it straightforward, but you won't be buying physical gold bars or coins here. Instead, you'll choose between two approaches: trading gold via CFDs for short-term moves, or buying gold ETFs for longer-term investing. I'll walk you through both so you can pick what suits you. Let's start with the more direct short-term route: trading gold using CFDs. This method tracks the price of gold closely and is best if you want to speculate on price movement. First, switch to your CFD account in Trading 212. Then use the search bar and type gold or XAU/USD. XAU is the ticker for gold priced in US dollars, so when you see XAU/USD, you're looking at gold versus the dollar. Select the gold instrument, tap Buy, and enter the amount you want to trade. Before you confirm, you can optionally set a stop loss to automatically limit potential losses, or a take profit to lock in gains at a target price. Once you're ready, confirm the trade. A quick word of caution on CFDs: they use leverage, which means both gains and losses can be amplified. You can profit if the price goes up or down, but the risk is higher, and overnight fees may apply if you hold positions beyond the trading day. This path is generally best for short-term trading and is not recommended for complete beginners. Now, for a simpler, beginner-friendly approach: buying gold through ETFs in the Invest account. ETFs are funds that aim to track the price of gold, so you get exposure without directly trading the commodity. Stay in your Invest account, then use the search bar and type Gold ETF or iShares Gold. Choose a gold ETF that aligns with your preferences, tap Buy, enter the amount you want to invest, and confirm. That's it. ETFs don't use leverage, which makes them safer than CFDs for most newcomers. They're designed for long-term investing, tend to be easier to understand, and typically involve lower risk than leveraged trading. You still benefit if gold rises over time, and you won't face overnight financing charges like you would with CFDs. To recap, if you're focused on short-term moves and fully understand the risks of leverage and fees, CFDs provide a direct way to trade gold's price. If you're building a long-term position and want a calmer ride, a gold ETF in the Invest account is the recommended route. Whichever you choose, take a moment to review fees, understand the product, and proceed with a plan that matches your risk tolerance.